Times Television Network. And you're watching ET Now.
Hi there, you're watching the FNO show right here on ET Now. IRB Infra should definitely, as well as Mitesh Thakkar, who join us as always on the show. But before that, a quick disclaimer. Please be sure to consult with your individual financial advisors before you take any position in the futures and options space, because while you may make windfall gains, you can also land up in deep losses. The Nifty has breached that 5600 mark on the downside after showing a steady move up until yesterday. We've got a decline now at 5587 for the Nifty, not being able to hold on to its gains. So some bit of a long unwinding as well as short positions being taken today. Dr. Narayan, what's the sense that you're getting right now?
Well, the first off, it's a sense of disappointment, right? We were looking for the market to go up yesterday. It did seem like it would do so. We had very nice trading up in the overseas markets that led us to believe that today we might have a pretty good time, which is the reason we went long in the 5700 call as of yesterday. But then the whole thing has been a bit of a disappointment, because once again at about 5650, the seller who had sent the market down in the last week seems to be very much active and clearly has more goods to offer. So I think for the moment the highs of the market seem to be pretty much capped around 5650. So I think that's how we have to really trade it now. We are still looking at about 5550, 5650 as being the range. We have very definite support coming in at about 5550. So one was looking for the upside to express itself, but that has been, like I said earlier, a bit of a disappointment. I think we'll have to live with a ranging action right into the expiry. I'm hoping to be proved wrong and for the market to go up, but then we have to go by the weight of evidence, and that clearly suggests that our hopes are not really being entertained by the market right now.
So what does one do with that 5700 call that we went long yesterday?
Yeah, we went long at about 35. So rule of the thumb for any option trade that I have in my book is that if it falls to about 50% of what I have paid for it, I would rather simply, exit it as a lost cause. So if you bought it around 30-35 levels, so 15 to 17 rupees should be your stop loss. If it starts trading below that, we have to simply give up and simply take our loss. If the market goes up and it is very, very slow, even then it would be better to exit it, because we don't have too many days for the expiry. So we don't want to wait for the last, because, theta will erode it away. So unless we get speed on the upside, it is much better to exit the long call and simply move to the sidelines.
All right, so maintain the stop losses there and watch out for the 5700 strike call. Mitesh